What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any publicly traded company in the U.S. stock market. Make sure you hit that like button if you haven't already. Real helps the channel grow. Thanks to all those who continue to tune in. If you haven't already, hit that subscribe and notification button as well. That way you are alerted to when we release new videos. We do drop bonus content from time to time, so you make sure you are aware of that. Now, the nightly and weekend videos, like tonight's video, focus on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings and leap trades as well. So if you want a deeper dive into exactly how we set up our charts, make sure you check out that bonus content on our YouTube page. We've got a couple of videos that'll dive deeper into that for you. And also, if you want a quick reference guide to the STRAT, there's a link to a free PDF in the description of this video as well. It will go over, the main STRAT reversals, broadening formations, things of that nature. So make sure you check that out as well if you're not familiar. We encourage you to watch the whole video. We do go over triggers and targets for, short-term plays, but we cover, price action for all time frames up through the 1-year chart. So make sure you stay with us through the whole video. I'm sure you'll be glad that you did. Let's go ahead and take a look at the agenda for today's video. We'll go ahead and recap the price action from Tuesday, February 3rd. Then we'll zoom out like we always do and take a look at the week, month, quarter, and year's price action. We will zoom back in at that point to set our 4-hour markers for the following day and the triggers and targets. That's Wednesday, February 4th. And then we will do a quick review of the triggers and targets for the week, month, quarter, and year as well. So let's look at the chart here. We bring up the 5-minute chart like we always start out with. This allows us to capitalize off of the proven and repeatable strategy that we talk about. That strategy is looking for the opening price or the opening trading price, which we call the opening print, and we look for higher lows at or above opening print to get into calls, and we look for lower highs at or below opening print to get into puts. There's some nuance that you can use with this as well if after you've been using it for a while and you're comfortable with your style of trading. But we'll kind of get into that a little bit later. But the main objective is look for higher lows at or above opening print to get into calls, lower highs at or below opening prints to get into puts. Your targets will be either overnight high and previous high a day if you're going to the upside, or previous low a day and overnight low if you're going to the downside. Now, today is one of those more nuanced days. Like yesterday, we had the very clear lower high on the 5-minute very early on in the first 3 candles of the day. If we look at today's price action, we open and we quickly flash up. Now, what we flashed up to, and the reason why I bring in a little bit of yesterday's price action, this is the end of Friday's price action, and a 15-minute broadening formation was created. If we were to bring up the 15-minute chart, that would show it. Well, I'll stay on the 5-minute for now. You can still see that general high to higher high and low to lower low. I'm sorry, lower low down here to close out the day. Right, here's the first 5-minute candle of Tuesday's price action. So we wicked up and rejected off of not only a 15-minute broadening formation, the 138.2 fib extension of last year's price action, as well as a 1-hour broadening, 1-hour downtrend line here in this dashed line, right? So this is where we used a little bit of our nuance. We saw that happening in that first 5-minute. You flip to the 1-minute and you actually get a lower high here. So we went ahead and entered price once we broke below the low of the first 5-minute candle. We went ahead and grabbed a few puts, pushed down initially, watching for any corrective activity at overnight low, because obviously that's our first target. We got that little bit of corrective activity in the form of a failed 2 down, but never went 2 up, and just immediately, the bottom basically fell out at that point. Pushed down, got a good move here, and then we did end up getting a lower high here, followed by a lower low, but then that was violated by this higher high here. Higher low, higher high here. So we sold a majority of our puts here, but you got to keep a look at the 15-minute. There was plenty of opportunity for the lower high there, so we did have some runners that were left. And then here you get the lower high flush on the. Here we go on the 15-minute. Let me just bring only today's price action in here. There we go. So on the 15-minute, there's your lower high. We went ahead and entered more puts on the 5-minute because it was obviously a domino type of situation at that point, right? So bring the 5-minute back up. And again, this is where a little bit more nuance comes into play, and it was a little bit higher risk, right? So we added some puts here, knowing that, if we continue to push down and got lower highs and lower lows on the 5-minute, that would trigger the lower high on the 15. And sure enough, after a little bit of sideways action, we'll say, slowly sliding down, we were still getting the lower highs, lower lows, lower high, lower lows, but they were very incremental, very, very small. And then finally, we did get the flush. Now, we sold another good set of our position at the previous low a day. There was that further dip into the gap. We did leave a couple of runners just in case we did get the gap fill. We didn't. And once we made the higher high here, basically at last week's 50% level, we went ahead and got rid of the last of our puts. And then we noticed, we're getting some good consolidation. We talked about in plenty of videos before how the top of a gap can actually be a bounce point, especially intraday. Now, we may go back and fill it tomorrow, but intraday, especially after a large move, that the gap, the top of that gap does tend to act as a bounce point, and that's what we got here today. So we bounced, we got the higher low, and then this higher high actually triggered the higher low on the 15-minute as well. Let's bring that up. There we go. So we got the higher low and then finally went higher high. So we went ahead and jumped into some calls just based off of position risk to reward, right? We by no means have changed the downtrend on the 1 hour. We've actually set a downtrend on the 4 hour. But what we're looking for is just the bounce before we are to make a lower high. Or if we just want to take off, that could be the case as well. I was mistaken in yesterday's video. I thought AMD's earnings were after hours yesterday, but they're actually today. So, looking at SOXL is actually down 3% in after hours right now. So, not sure that was a very good guidance for AMD, but we'll see. I'll have to dig into that a little bit after I make this video. Anyways, we did play a little bit of swing to the upside, kept them overnight just to see what might happen. That's basically where we stand, and we're just waiting for a lower high to be put in to jump back into calls. Now, to kind of hedge this, to jump back into puts. To hedge this call that we made, we did swing a few SOXS calls, $2 calls, for the February monthly. So kind of playing both sides of the coin here. The call wasn't the calls that we got weren't extremely expensive. So looks like we may end up just taking a hit on those. But again, that doesn't really apply to the proven and repeatable strategy that we use for the intraday trading. So, that's on us. And, we felt that the risk to reward was good there. To see if something might happen overnight with AMD earnings. So the SOXS calls should help lessen the blow a little bit there for the SOXL calls that we swung. But again, that's more of a different strategy that we're than we normally talk about here on this channel, right? So again, a little bit more risk, and we were willing to take it at that time. It's only Tuesday, but we've had quite a good week so far. So, a little bit of risk there on the table. I don't really like to use the phrase like playing with house money, but did feel like taking a little bit riskier play after such a big downdraft today. A lot of times, if you get a big drawdown, even if you're going to get a dead cat bounce the next day, you do get that little bounce. So, we'll have to see what happens overnight and in the morning to see if we do get pulled back up from where we are right now, down in after hours, but we'll see. But anyway, that's how today's price action looked. Looking at the 1 hour, because I did talk about the 1 hour downtrend, right? There we go. Actually, let me bring in that's a good right chart here. So we can see on the hour, right? We talked about yesterday. We pushed up just into the the middle of this larger range that we've been trading in, and and especially for like swings, you want to wait for the edges to see how things are going to play out, right? Are we going to fail the range and start trading in the previous range, or are we going to bounce back up to the top of the range and just continue this sideways action, right? That's the play. So we did get the trigger on the intraday in the middle of the range, which brought us back down to the bottom of the range. But as you can see, it looks like, at least in normal out trading session, it looks like we are at least starting to bounce back up. But again, we got plenty of room to put in a lower high, just like we were talking about yesterday. So yeah, that's the 1 hour downtrend is still set in place. And actually we started the 4 hour, if I can get thinkorswim to work here. There we go. Let's get a better chart here. If we go to the 4 hour, right, we've got high, low. I'm sorry, this is a higher low, lower high, and lower low. So we have started a downtrend on the 4 hour. And we've got this gap that we poked into today that pretty good chance that it could be filled tomorrow, especially with this overnight activity that we're seeing so far. So everything on the even to the day, right? The day looks as though we put in at least a soft lower high at this point. Got to see what happens with tomorrow's price action. But does look like a downtrend is starting on the day as well. So we talked about in yesterday's video, we will start to change our tone once the 4 hour and day downtrends start to get set in place, and we're starting to see that happen now. So the tone does start to change. If we look at the week chart though, however, there we go. We're still all right. Right? Yes, we got a 2 down finally after 1, 2, 3, 4, 5 green weeks in a row where we had higher highs and higher lows than the previous week. We're finally getting a little bit of a pullback. We talked about that yesterday. It's not the end of the world. We've got a lot of room, down here at 42 to set a higher low. And even that 42 is kind of a soft higher low there. The more solid higher low, more line in the sand type of area would be this $35, $36 area. So we've got a lot of room that we can pull back with still without threatening anything from the week and above, right? If we're looking at just, trading ranges, we had the, I'll just bring out the box so it's more visual, right? We had the trading range from the end of the year. There we go. And they say once you break out of a trading range, you go on to double that trading range. And we've almost done that already. So a little bit of a pullback is not the worst thing in the world that we're seeing here on the week chart. The week is still green. So, how bearish can you be when the week is still green, even if it's a 2 down, right? Are we just setting a higher low on the week is the question, right? We've got to wait for next week in order for that to play out. Really, the rest of this week to start to play out in order to understand that, because that green week can turn red and we can see more pullback. But, if we were to end, the week were to end here, it would be a very, reasonable question to ask, did we just set a higher low on the week? So, again, from the week perspective, nothing crazy going on here. If we look at the month chart, where are we at? There we go. On the month, inside month, still green month. We're towards the top of the, we're in the upper 50% of the previous month's range, and trying to get back up into that top third of the previous month's range. But again, inside month is still green. We're only 2 days into the month. Not a whole lot we can say from that perspective, but it still looks good from the monthly perspective. The quarter, we did talk about how we ran the STRAT. Let's get the more clear chart here. There we go. Those weekly broadening formations are there. So we did run this one combo 2 down, combo 2 up STRAT to the 70.08 magnitude. So that's been run. So, after the STRAT reversal has been fully run, especially on a time scale like the quarter, you should see a little bit of a breather, right? Not necessarily saying it needs to pull back, but a lot of times you'll see sideways action after STRAT reversal has been completed. So, this is, nothing out of the ordinary, right? And if we go to the year, again, we got the 2 down, the 2 down, 2 up on the year. That triggered very early in January, and we've already reached magnitude up here, that 70.08 as well. So only thing we've got left is that 74.21, which is the all-time high. But for all intents and purposes, the STRAT reversal on the year has completed as well. So it's not anything crazy to see a little bit of a pullback after the STRAT reversal has been completed. All right. So let's scroll back in and take a look at things on the smaller time frame. Start looking at tomorrow's activity and how we'll attack the day. Oops, I forgot to move overnight low once again. We'll just say, what's it right now? 59.34. We'll put it at last month's 50% level. And let's move overnight high back up to around this 1 hour broadening formation level, right? So we'll say that that is the range for the overnight trading action, and we now have our 4 hour markers on the chart, right? Those 4 hour markers are previous high of day up here at the top, overnight high, overnight low, and previous low of day. The only 4 hour marker that we have left to get is the opening print, and of course we have to wait till Wednesday's price action to actually start trading, or Wednesday's trading to start to get that opening print. But let's say we get a little bit of bounce off of the last month's 50% level in after hours, but we still open down from where we closed, right around the week flip, which also coincides with the last week's low, right? So let's just say that this is how we open up, right? If we open and we get a little bit of push up, maybe reject off of this monthly broadening formation and pull back, but then get a higher low at or above this opening print level, we want to look to get into calls targeting overnight high and then previous high a day, right? Now, if we get to previous high a day and continue with more momentum, we can look to the triggers and targets on the 4 hour time frame, which we'll look at here in our notes here in a second. But for the move off of the opening print level, right? So from the higher low at or above opening print, the initial target is overnight high, and the ultimate target is previous high a day. Now, if we were to open and push to the downside, maybe get a little bit of bounce off of last month's 50% level, then come back up, but then get a lower high at or below opening print, we want to look to get into puts. Overnight low is that first target, but there's obviously no magnitude there, so probably wouldn't let anything go at that point. Previous low a day is the next is the magnitude for that move. Again, not a lot of magnitude there, so you would want to hope that once we get there, we continue past it, dipping back into that gap again and try and go close that gap. But we'll talk about that here in a second when we get to our 4 hour triggers and targets. But just from a purely early morning scalping perspective, or for an early entry into a longer day trade, we want to look for higher lows at or above opening print to get into calls, and lower highs at or below opening print to get into puts. All right. Let's go ahead and go to the 4 hour chart so that we can look at things from more of a day trading perspective. Remember, we have started this. Actually, I didn't draw this in here. Let's put this on now. We've got this downtrend that is formed on the 4 hour. So we'll properly mark that there. But we see that we were set up for a possible 3 2 down 2 up reversal on Wednesday, right? In the first 4 hour candle, right? So we have that big 3 in the first 4 hour candle of Tuesday. Then we've got this failed 2 down, and that just sets up a 3 2 down 2 up. Now the trigger is the high of this 2. So as soon as price action is above the high of the second 4 hour candle from Tuesday, that triggers the move, which has a magnitude of the high of the 3, right? So that would take you from 61.26 all the way up to 67.62. So about a $5 move. So a lot of money that can be made in that move. But you do need to keep in mind we are in a 4 hour and a 1 hour downtrend. So you need to watch for any rejections, especially once you're getting up around the $65, $66 level. That's where you start getting these downtrend line intersecting with the last week's 50% level. We talk about every week how important that previous week's 50% level is. And so, we don't put as much weight into the downtrend line, but when that downtrend line is crossing a horizontal line that we do pay attention to, it gives it that much more weight, right? And then we also have the 200 fib extension of the bull flag from the April 7 low right here as well. So watch for some resistance when you get to that $65, $66 level. And that's where we could kind of, get that lower high and continue that downtrend. But, if we break through, run the magnitude, then obviously we want to look for some type of higher low, above this downtrend line to look for more upside action. Now, if we go to the downside, right, we're just going to get this two down continuation. Obviously, we've got the gap below the 150 fib extension of the April 7 bull flag is right here at 54.42. I'll just activate that so you can see it right there. You can see we wicked off of the 61.8 fib earlier today. And then, of course, we've got the market maker's expected move low down here at 53.49. If you're not familiar with that level, make sure you check out our weekend video where we dive deeper into that. All right, so that's what we've got from a 4-hour perspective, day trade, overnight swing perspective. Let's go to the day. Let's get the right chart out here. There we go. And in looking at the day, you can see we are left with a bearish engulfing candle from Tuesday, right? And so that leaves the door open for quite a bit of STRAT reversal starts, right? Like starts to STRAT reversals, because with the 3, you generally need a three candle combo to get some type of reversal, right? So we need like either an inside day on Wednesday, or we need a 2 up or a 2 down, which would then set up the next, the STRAT reversal in whatever direction on what would that be, Thursday, right? So if we get an inside day tomorrow, on Thursday we could get a 3-1 2 down, or a 3-1 2 up. If we get a 2 down day tomorrow, we could be especially if we get a failed 2 down, we could get set up for a 3-2 down 2 up on Thursday. So just keep in mind, there won't be a whole lot to act off of from the 1-day chart perspective, right? We're just looking to see, are we going to go 2 up, 2 down, or stay inside, right? So not too much to say there. Just targets, no magnitudes for reversals, right? So let's go ahead and just look at the notes here so we can look at the hard numbers. This is for Wednesday, February 4th. There will be 229 trading days left in 2026 on Wednesday, and we know that the close price on Tuesday was 61.20. We know the week, month, quarter, and year are all green, so we have full time frame continuity to the upside. That leans towards the bulls direction. But we do know that the week does flip red at 59.51, and if we're just talking about after hours, we're already flipped the week red. So very very close to flipping this in real time trading, or regular trading, I should say. So just watch for that to fall. It's actually the week and the month, because the beginning of the week was the beginning of the month. So we could get into some conflicting time frame continuity, right? And then that would just probably lead to more, at least chop, if not more pullback, right? We know the expected move for the week, the market maker's expected move is $8 plus or minus $8.30 from the close of Friday's price action. That gives us an expected range of 70.09 to 53.49. Obviously we're dead in the middle of that range there. No gaps above. We did dip a toe into the gap below today, but we know that we've got plenty more to the downside that could act as magnets. Now on the 4-hour, if we do get price action to the downside in the first 4 hour of Wednesday's price action, that just gives us a 2 down continuation, triggering at 57.02, and we've got some targets out here for you. Since there's no magnitude, it's not a reversal. Unlike on the to the upside, right? If we go to the upside in the first 4-hour candle of Wednesday's price action, that triggers a 2 down 2 up. That triggers at 61.26. We do have these intermediate targets as possible points of reversal or just sideways action, because again, we are in a downtrend on the 4-hour and 1 hour. But if we do break through those, the magnitude of that move is actually 67.62. So about $6, a little over $6 of price action that you can get there. All right, plenty of room to get in. On the day, we talked about how with the bearish engulfing candle, it's going to take a little bit of patience. We won't have anything trigger on the day from as far as a reversal or perspective. We will look to see if we go to the downside or upside. If we go 3-2 down, that triggers at 57.02. We've obviously got the gap close as a target, and then we've got some extended targets listed out here for you as well. And then to the upside, if we go 3-2 up, that triggers at 67.62, and we've got a couple extended targets out here for you as well. It's going to take quite a bit to get up to 67.62 as it is, so not sure how much further we would get unless we were to get some type of crazy overnight price action that would have us opening up closer to that 67.62 area. All right. Now we talked about on the week, we did trigger the 2 up, 2 down at 59.60. We did go down to 57.02 today, so that reached magnitude. So technically that strat has run, but it did kick off a 2 up combo 2 down which has a magnitude of 55.44, and there's actually a series of combo 2 up 2 downs that could be triggered in a domino effect type of thing, which is why we've got the extended targets listed out here for you today. Got to get up to 71.98 in order to get that bullish engulfing candle. So not out of the picture at this point, but it'll be a test to get up there, right? We talked about on the month, it's still an inside month. If we do end up going to the downside, that does trigger a 1 2 up 2 down reversal, kind of the reverse of what we had on the quarter. We'd have to get all the way down to 45.08 for that to trigger. Not out of the realm of possibility, but it is quite a ways to go, so not really talking about it at this point. If we draw closer, then obviously we'll look at that, because the magnitude of that move is 28.12. If we do end up going to the upside and going 2 up, that triggers it obviously at 71.98, and we've got our targets listed out here for you, 74.21 being that all-time high. On the quarter, we talked about how we triggered and ran the strat, 1 combo 2 down, combo 2 up, right? Magnitude was 70.08. We reached that, so now we're just looking for all-time high in these extended targets out here. Blue sky territory once we're above 74.21. So, no levels to the left to look at as points of reference, right? We've got to use the fib extensions, broadening formations, things of that nature, and that's why we've got these listed out here for you. And then on the year, we talked about as well, we triggered the 2 down, 2 up reversal, but it also reached magnitude as well at the 70.08. So just looking for that all-time high and those extended targets from there, right? So there you have it. Those are your triggers and targets for everything from a scalping perspective all the way up through the 1 year chart. I hope everybody enjoyed it. Tried to jam in as much information in as possible without taking up too much of your time. So we do we do appreciate you for hanging with us through the whole video. If you've made it this far, don't forget to give us a thumbs up. If you think the video could help somebody, give it a share as well. The strategy doesn't work just for SOXL. That's just what we decided to focus in on for this video series, but it will work for any company that's publicly traded in the U.S. stock market. So give it a share if you think it might help someone out. And again, we really appreciate those who continue to come out, especially those giving us a thumbs up. The back and forth in the comment section is enjoyable as well. So keep those comments and questions coming. All right. So we'll end things here like we normally do. If you're watching this Tuesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Wednesday morning or Wednesday during the day, we hope you got some good rest last night and woke up refreshed. And we look forward to getting out there and trading with you.